Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, October 13th, 2010. Well, rally's the name of the game on Wall Street again, folks, as the markets are trudging higher. Now, what do you have to say for yourself in regards to this market? What are the basic keys that you have to be recognizing in this market? First off, volume is minuscule. Would you believe here nearing 2:30 p.m. Eastern Time, we have just crossed 100 million on the SPY, folks. Remember, back a year ago, minimal volume was 200 million. A decent day was 250 to 300. We will be lucky if we do 150 million today. Volume is non-existent, and that's just allowing this market to be floated up on the back of a dropping dollar. Take a look. The dollar continues to move down. This is where it closed yesterday, folks. I'll draw the line in right there. This is where it currently is today. You can see we saw other trend lines and breakdowns yesterday on the back of the Federal Reserve FOMC minutes that came out. And again, just remember, folks, this is what the Fed has in store. Their goal right now is to pound the dollar left and right. Their goal is to dilute the dollar, printing trillions and trillions of dollars, creating a false wealth effect. The false wealth effect essentially is when you create lots of money and throw it into the system, it makes equities go up because for every 2% or 10% that equities go up, the dollar is technically dropping the same amount, so there's no new wealth created. Because again, if the dollar's worth 10% less and equities are worth 10% more, it's just equal in value. There's no wealth whatsoever created, but it makes the average American, which let's be honest is not the smartest cookie in the bunch, think that there's more wealth in there. They're more likely to go out and spend. They're more likely to go do this. Maybe small businesses are more likely to hire because they think there's been wealth created, yet there has not. And again, it's the biggest, really, in the scheme of things, it's the biggest Ponzi scheme ever. You thought Bernie Madoff was big. Not even close, folks. This is going to be the biggest Ponzi scheme ever created. And again, it's not called that because it's done by a governing body, the Federal Reserve, which isn't really part of the government. But technically, I mean, let's call a spade here. It really is because it's all working together. But again, they're basically borrowing from Peter to pay Paul, essentially borrowing from your pockets to dilute the currency, which kills you and taxes you even more. Because remember, a dollar that only buys 90 cents worth of something, that's essentially a 10% tax or a 10-cent tax for every dollar. Remember, since July, the dollar is down over 10%. Markets, what are the markets up since then? Probably about 10%. So net, have you really gained any wealth? Absolutely not. And the dollar continues to go lower today. That's the only way this market is being held up. You have POMO going on, which is open market transactions by the Federal Reserve as they buy treasuries, tips, and throwing money into this market to prop it up. We can take a look here. The earnings that came out yesterday, let's take a look. Let's see. Let's decide whether or not the earnings are really influencing this market in a major way. What reported yesterday after the bell? Well, we had Intel. Does that look like a stock that is creating a lot of upside momentum today, folks? Now remember, the Dow's up 134 points today. Dow's up 134 points. Nasdaq's up 35. S&P's up 14. Oh, yeah, but wait a minute. I thought they were talking about good earnings on TV. I thought the hype on Wall Street was that you were seeing, great earnings out there. But wait a minute. But Intel's getting crushed here. This chart of Intel looks about as ugly as you can see. Well, so must be J.P. Morgan then. It must be J.P. Morgan because, Intel's obviously not the reason for the catalyst of the market up move today. So let's go look at J.P. Morgan. So we type in J.P. Morgan here. Let's take a look at JPM. So J.P. Morgan's down 40 cents today as well. Okay. So that doesn't make sense. So what's driving the market up today? Oh, that's right. If you take out all the Wall Street hype, it's clear and simple, the weakness in the dollar and POMO. All right, permanent open market operations by the Federal Reserve to pump up the markets basically infusing money into the system, using the printing presses, diluting your hard-earned currency, your hard-earned wages. And again, that's the goal here, folks. I want you to be fully aware. We're no hype here, nonsense. Tell it how it is. This is how it is. Now, in the short run, is it going to push the markets up? Absolutely. However, in the long run, you're creating the biggest bubble ever in history. You thought the financial crisis was big? Not even close. What's being created right now, which eventually will come tumbling down, will be the biggest thing ever that you have ever seen. And again, the more they're doing this, the bigger the bubble is. Now, if they stopped right now, yeah, it'd still be a bubble that have to unwind itself. But overall, they're not going to stop. And again, you have to recognize the levels. And right now, if you go to the SPY, let's punch up the SPY here. This is your daily SPY. You took out the 118.50 today level, excuse me, the 117.50 level today. You're now on pace for your next line, which is right up here at 119.75, 119.50 area right here. That's your next spot. Then your next spot would be approximately 120.75, and then 122 would be a double top up here. These levels are very real now because of what's going on. If this is continuing to work, which it obviously is because people aren't realizing, and as long as you're inflating the market artificially, it seems to be working right now. Just think of artificially inflating anything. Eventually that air is going to come out. It's like trying to blow up a balloon with a hole in it. Yeah, if you pump air really quickly, if you blow air into it from your mouth really quickly, yeah, the balloon will expand, but how long can you really blow the air in before you get tired and then the air is just going to leak right out and come, crashing down? But in any case, these are your levels on your daily chart. If we go to your intraday, folks, you see amazingly this line was hit. This line here on the blue line slanted goes all the way back to this pivot low. Look at this pivot low connected through this low here all the way up. And this line extends right here. We have now gotten above it. And one thing I was telling the chat room today in the intraday stock chat, by the way, everyone should be joining. If you have an hour free a day, you should be in there learning and taking trades and just understanding the markets and the sentiment and what's going on out there, because we give pure and simple analysis. But please understand this. You got above the blue line right here, and you didn't confirm until right here. This is the line you confirmed at. Once you confirmed, I said to the chat room, I said basically as long as we were chopping here, I said the market could come back in. But as soon as we confirmed with this candle close right here, that basically told me the market would most likely stay up the rest of the day and continue to angle its way sideways to higher, and that's exactly what it did. So again, utilizing the proprietary techniques of in-the-money stocks here of confirmation, you can see as soon as you see that, it should tell you that, again, if you're in any shorts in the intraday period, move out of them. You're not going to get a big pullback or take a small gain if you get any small pullback, and otherwise just continue to expect the market to go sideways to higher today until we get back below this blue line and confirm. Right now you're having a little bit of a pullback, but it's very minor at this stage, and again, until you get below this blue line, which is also the 20 moving average, do not, and I repeat, do not expect any major fall in this market. You confirm below this blue line, you actually could fall all the way down to the 50 moving average down here, but not until you confirm below it. So don't get carried away. You want to be very cautious. Remember, the Federal Reserve, which literally has trillions of dollars at their disposal, is out there attempting to and continuing to and succeeding to pump this market up left and right, every which way, whatever it takes, inflate. Now, again, the inflation thing drives me nuts because, you're not seeing real inflation yet because they don't calculate in food and energy. They say, oh, food and energy are too volatile. We don't want to count those in the inflation data. So we're going to look at clothes. Well, clothes, houses, whatever, they're not inflating yet. But the problem is, folks, as you print more and more money, eventually that will change. Not only that, but I don't know about you guys out there. I spend most of my money each month on food and energy, as well as, a few other small things. But food and energy are huge. So is it really fair to say that, well, it doesn't matter? Of course it doesn't, because of course it's not fair to say that, because it does influence the average person out there. The average person, the higher commodities go, and remember, as they print more money, commodities and equities, just like equities have to go up, commodities do as well. Take a look at gold today. Gold is soaring. This is gold, guys. This is a commodity. It has to go up in relation to the dollar. If you look at this chart, look at the dollar chart. See the dollar is down and gold is up? That's because commodities have to go in the opposite direction. So my point is this. If you're looking at oil, if you're looking at copper, if you're looking at any of these commodities that are going up, that are going to be used in building or in energy consumption or food or growing, whatever it is, you have to understand it's going to work like a tax on people. All of a sudden, their dollar's worth less. The commodity is going to cost more. That's net losing out regardless of what the market's up. Unless you're going to make the market go up 100% from here, and even then, the only way they can do that is by dropping the dollar, 50% or whatever. You're not going to have any real wealth created, and that's the key, folks. If there's one thing I want you guys to leave from the video today, it's to understand that there's no wealth being created here. It's an artificial wealth effect, which again is utilized to fool the average American into thinking they're richer than they are, because all of a sudden their 401k is up 10%, 20%. But little do they know that 401k is going to buy 10%, 20% less on the open market when you go out and buy that stuff. All right, folks? Understand that, folks. I will be back, as always, in the nightly video in the Research Center. I want you to come join that Research Center ASAP. You want to understand what's really going on. You want to get the trades, the new kind of moving thought processes on this market and how to handle it and how to manipulate, how the manipulation works, so you cannot be fooled by it. Have a wonderful day. Also, remember, webinar this weekend. Get involved. That's proprietary techniques we will be divulging in the webinar this weekend. Take care, folks.